The largest precious metals dealers across the United States just issued an urgent warning. Their display cases are being completely wiped clean every single weekend. But here is the grim reality. 90% of the people frantically hoarding precious metals today will be forced to liquidate their entire stash for pennies on the dollar at the absolute bottom of the next crisis. Why? Because they are making a fatal mistake in their financial survival strategy. It is always better to have it and not need it than to need it and not have it. But do you actually own the right assets? That voice you just heard belongs to one of the most respected macro minds in the space. And behind that warning lies a concept that 90% of retail investors completely ignore. Welcome to the financial survival pyramid. To understand why a massive panic buying spree leaves most retail investors completely vulnerable, we have to look back at the chaos of 2020. Most everyday investors look at the spot price on their phones. They track the blinking green and red numbers. They think they understand the market. But that is not the real story. During the dark depths of the last major systemic shock, something unprecedented happened. The paper price of silver on Wall Street completely collapsed. It dipped below $13 an ounce. On paper, it looked like a lifetime buying opportunity. The financial media called it a total liquidation of assets. But if you actually put on your coat and walked into a local coin shop, you were hit by a wall of reality. The shelves were completely bare. And this is where things get dangerous. A massive, permanent chinking noise developed between the paper derivative market and physical reality. If you could actually find a dealer holding an American Silver Eagle, you weren't paying $13. You were paying a historic premium of $10 to $12 over the spot price. That is a near 50% markup just to lay your hands on the physical metal. Smart stackers watched this exact moment play out. They realized that when real panic hits the system, the global logistical engine freezes. Mints shut down their production lines. Overland shipping supply chains snap. Physical availability completely vanishes just as global demand explodes. The market decouples. The paper price becomes a lie. But here is the real catch that most people miss. Not every physical metal serves the same purpose when a crisis drops. If you buy the wrong layer of metal for the wrong scenario, your sense of security disappears instantly. Because behind the headlines, big institutional money does not view precious metals as a single monolithic block. They split them up. That is why professional macro analysts break down physical holdings into three distinct defensive tiers. We call this the financial survival pyramid. Each tier has a unique purpose. Each tier operates on a completely different timeline. At the absolute foundation of your pyramid sits your Tier 1 asset. This layer consists exclusively of large gold bullion bars and heavy sovereign gold coins. Think 1-ounce gold Britannias or American gold Eagles. This layer has one single non-negotiable job: wealth preservation. This is your ultimate hedge against systemic, long-term currency debasement. It is your shield against the total collapse of fiat currencies. It is not designed to be traded quickly. It is designed to sit deep in a secure vault, completely untouched, protecting your core life savings over 5, 10, or 20 years. It represents your long-term generational survival. But you cannot buy a gallon of milk with a 1-ounce gold bar. If you walk into a crisis with nothing but heavy gold, you are functionally trapped. That brings us directly to Tier 2, the critical middle layer of our pyramid. This is 90% constitutional silver, often referred to in the community as junk silver. These are pre-1965 United States quarters, dimes, and half dollars. Why do smart stackers actively accumulate these specific coins today? Why do they pay premiums for old pocket change? Because they possess instant recognition. They carry zero assay fees because their weight and metal content are fixed by historical law. They cannot be easily counterfeited by modern bad actors. And most importantly, they act as your medium-term transactional buffer. when the local banking grid goes completely offline, when digital point-of-sale terminals lose power, these small silver coins become real money on the street. They bridge the massive gap between long-term wealth and daily survival. Then, at the very peak of the pyramid, sits Tier 3. This is hyperfractional gold, best represented by modern innovations like goldbacks. These are literal physical notes containing precisely measured amounts of pure gold as small as 1/1000th of an ounce, embedded within a durable polymer layer. This layer is designed for one specific extreme scenario, a localized grassroots barter system. When confidence in paper money drops to absolute zero, these fractional units give you the power to conduct microscopic microtransactions without giving up your larger assets. But stacking these 3 layers is only half the battle. Most people think that once their pyramid is built, their job is done.
They believe they have successfully beaten the system, but that assumption is exactly what the market counts on. Because behind the flashy headlines of the precious metals community, a much larger, much more predatory trap is waiting for uneducated investors. You have your pyramid meticulously set up. Your home vault is secured. Your stack is growing every single month. You look at your physical wealth and you feel completely insulated from the coming economic storm. But this is where things get dangerous. What if I told you that owning hundreds of ounces of pure gold and physical silver could still leave you completely bankrupt within the very first week of a major systemic collapse? It sounds completely contradictory. It flies in the face of everything the mainstream precious metals community tells you. But historical data proves it happens to unprepared stackers every single time the system breaks. Because behind the flashy headlines of financial doom lies a brutal physical reality. Physical precious metals suffer from a critical flaw during a sudden shock. They have extremely low immediate liquidity. Most retail buyers conflate long-term value with short-term transactional utility. They are not the same thing. Value is what something is worth. Utility is how fast you can spend it right now to save your life. Let's look at the actual mechanics of a sudden systemic freeze. Imagine the digital payment grid goes completely dark. A cyber attack, a localized banking holiday, or a massive rolling blackout hits your region. The credit card terminals at your local grocery store are useless. The ATM down the street has a line stretching 3 blocks long, and it runs out of physical paper bills within 20 minutes. You realize you need to react. You need to secure resources. You pull into a local gas station to fill up your truck and secondary fuel cans. The pumps are running on backup generators, but the station owner announces they are only taking physical payments. You walk up to the counter and you place a beautiful, uncirculated 1-ounce American gold eagle on the counter. In a normal market, that coin is worth thousands of dollars. It represents true, immutable wealth. But the store clerk looks at you with complete confusion. They do not know who you are. They do not have an electronic spectrometer to verify if that gold is real or a tungsten-filled counterfeit. They do not have microbalances to weigh it. And even if they fully believed it was pure gold, they do not possess thousands of dollars in small paper fiat bills inside their cash register to give you your change. They turn you away. You drive to the local pharmacy. Your child needs a critical prescription of antibiotics or basic medical supplies. You try to offer a 10-ounce pure silver bar. The pharmacist looks at the silver, looks at the growing panicked crowd behind you, and tells you to leave the store. They don't have time to calculate spot prices, spot premiums, or verify your metal purity while the world is fracturing outside their window. In that exact moment, your generational wealth is functionally useless. It cannot buy a single gallon of fuel. It cannot buy a single bottle of medicine. Your gold is worth a fortune on paper, but your immediate liquidity is exactly zero. Data from modern monetary collapses proves this exact pattern repeats without fail. Look at the Weimar Republic. Look at more modern systemic devaluations in Venezuela or the localized banking lockouts in Lebanon and Greece. The retail stackers who threw 100% of their available capital into large-form precious metals were caught in an immediate liquidity trap. If you do not prepare a dedicated, physical emergency cash buffer alongside your metal stack, you are walking directly into an economic ambush. And this is where the trap snaps shut. When your family is hungry, when the municipal water supply fails, and when the local grocery stores will only accept small-denomination physical cash or direct, immediate barter items, your grand long-term wealth strategy disintegrates. Survival instincts take over. You will be forced into a position of absolute desperation. You will experience what institutional funds dread most: forced liquidation. You will have no choice but to take your precious, hard-earned sovereign coins to the only predatory local cash buyer who remains open in a crisis, a buyer who has a security team, a buyer who has a working verification machine, and a buyer who has a massive stockpile of small-denomination physical cash. They will look at your desperation, and they will dictate the price. You will hand over your generational wealth for pennies on the dollar. You will trade a 1-ounce gold coin for a few $100s in cash just to buy food and water to sustain your household for the next 48 hours. You will accept a massive, devastating loss on your physical assets because your immediate survival depends on it. You will be forced to liquidate your defense at the absolute bottom of the localized market, and the institutional smart money will be sitting comfortably on the other side of that transaction, absorbing your panic and taking your hard-earned wealth for a fraction of its true worth, because they understood a secret that 90% of retail stackers ignore. Metals protect your wealth at the end of a crisis, but you need an entirely different layer of defense to survive the first 90 days. This sudden vulnerability brings us directly to the core mechanism of a true monetary crisis.
Mainstream financial media loves to teach you that inflation is a slow, highly predictable crawl. They publish neat, colorful charts showing a gradual, controlled decline in purchasing power over decades. They want you to believe you have plenty of time to adjust your strategy. But according to the Austrian School of Economics, that entire narrative is a complete illusion. A real currency collapse does not happen incrementally. It behaves exactly like a row of falling dominoes. The system builds up massive structural tension silently beneath the surface for decades. Bad debts accumulate, central banks print liquidity to patch over the cracks. Everything looks completely normal. And then it snaps overnight. Confidence is the only true glue holding a fiat currency together, and in a systemic crisis, that confidence evaporates in a flash. By the time the general public realizes the banking system is broken, the exits are already completely blocked. The digital gates drop, and the value of paper money plunges towards its intrinsic value: zero. Because behind the headlines, a monetary collapse is an avalanche, not a slope. That is why you must completely transform your investor psychology right now. You have to stop viewing physical gold and silver as tools for mere speculation. You are not buying these precious metals to flip them for a higher paper fiat profit next quarter. You are not trading them to accumulate more digital numbers inside a brokerage account. You are acquiring them to secure your absolute financial sovereignty. You are buying your independent survival, your freedom, and your family's protection from a failing institutional grid. To achieve that level of unshakable defense, you cannot just blindly pile metal into a box. You must build your personal fortress in 4 strict sequential steps. You must build from the ground up. Step 1 begins entirely with your physical survival assets. Before you spend a single dollar on a gram of gold or an ounce of silver, you must secure your biological baseline. You stockpile shelf-stable food that lasts, medical-grade water filtration systems, and critical medical supplies to sustain your household. If you do not have these physical elements locked down first, your gold does not belong to you. It belongs to the man who holds the food. Survival assets are the true bedrock of the pyramid. Step 2 is establishing your immediate short-term liquidity cushion. You need physical cash kept completely outside the traditional banking system. But do not accumulate $100 bills. In a panic, high-denomination notes are useless for daily trade. You need small, highly divisible denominations, 5s, 10s, and 20s. This emergency cash buffer must be large enough to fully cover your minimum living expenses for at least 90 days. It acts as your primary transactional bridge for when the local ATM grid goes dark, or when a temporary systemic power failure cuts off your access to digital accounts. Step 3 is your local transactional layer. This is exactly where your junk silver and fractional gold backs enter the defensive equation. This specific asset class is not designed for long-term wealth storage. It is built explicitly for peer-to-peer trade in a fractured economy. When regional businesses refuse to accept digital credit cards and when they run out of change for paper currency, these highly recognized pre-1965 silver coins become your primary tool to barter directly for fresh food, local supplies, and emergency fuel. They give you day-to-day purchasing utility when the official currency is rejected. And finally, step 4, your core wealth reserve. This is your heavy, large-form bullion, your 10-ounce silver bars, your kilo bars, and your sovereign gold coins. These assets do not get carried in your pocket. They do not get used to buy groceries. They stay locked away deep inside a secure vault, completely out of sight, known only to you. You do not touch this layer, and you do not expose it to the world until the geopolitical smoke completely clears and a brand new monetary system is established on the other side of the collapse. Building this comprehensive, multi-layered structure requires absolute discipline. It requires you to consciously move against the herd. It requires you to ignore the daily noise of Wall Street and focus entirely on the physical realities of survival. But as history shows us, the crowd only prepares when it is already too late. And behind the daily headlines, the countdown to the next liquidity shock has already begun. At the end of the day, true financial survival comes down to a single, unshakable philosophy. Your strongest defensive asset is never the most expensive one. It is the one that possesses the highest practical utility at the exact moment everything else fails. Because behind the headlines, the math does not lie. When the next systemic shock strikes, a home vault filled entirely with heavy, large-form gold bars won't help you buy emergency fuel if the local economy is completely frozen. It won't keep your lights on when the power grid goes down, and it won't buy medicine when immediate liquidity hits zero. True safety is built in layers. It requires a balanced, tactical pyramid of defense. So, let me leave you with one final urgent question. When the local coin shops lock their doors next Saturday afternoon and your digital online banking app displays a flashing system error message, how many days will your current portfolio actually feed and protect your family? Do not wait for the system to break before you decide to organize your defense. Do not wait for a crisis to force your hand into a desperate losing liquidation trap. Drop a comment below right now. Tell me which exact layer of the financial survival pyramid you are actively focusing on accumulating this month. Are you stacking transactional silver, or are you still securing your basic physical survival needs? And if you want to verify your current strategy against a strict professional framework, click the link in the description below. Download our comprehensive free emergency preparation checklist today. Build your fortress before the storm arrives. Protect your sovereignty, and I will see you in the next analysis.